Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing from Latch Incorporated, and let me tell you, it's not your typical fairy tale ending. Think more along the lines of a merger gone sideways with a side of restatements. Prepare for a twist, because this story involves some accounting cleanup, a delayed report, and a company trying to put its best foot forward after some financial hiccups. So what's this all about? Latch Inc., a company that deals with smart locks and building management systems, acquired Honest Days Work Inc. or HDW. We're looking at an amendment to a previous report, all to finally include the pro forma financial statements related to this acquisition. Basically, it's the company's attempt to show what the combined entity would look like financially, had the acquisition happened earlier. Now, here's where it gets interesting. The reason for the delay: a restatement of Latch's previous financial statements. A restatement is basically when a company has to correct errors in its previously reported financials. This caused a delay in the release of their annual report for 2022 and their quarterly report for the first 3 months of 2023. Because of that, they couldn't file the pro forma information on time. It's like trying to bake a cake when you realize you used the wrong ingredients last time. Alright, let's dive into the numbers. These are unaudited pro forma numbers, which means they are estimates of what the combined company's financials would have looked like if the acquisition had happened sooner. It's not a guarantee, but it gives us an idea. We have the pro forma balance sheet as of March 31, 2023, and the year ended December 31, 2023, and the year ended December 31, 2023, and the year ended December 31, 2022. Let's check some of the key figures. For the year ended December 31, 2022, if we look at the combined statement of operations, the unaudited pro forma revenue amounts to about $56.7 million. That's the total amount of money the company is bringing in through sales. Now let's glance down to the net loss, which shows a loss of over $247, much more money than it is making. That sounds bad, and it is. Usually it means the company is spending much more money than it is making. That sounds bad, and it is. Usually it means the company is spending much more money than it is making. That sounds bad, and it is. Usually it means the company is spending too much to grow, or something is going wrong in general. For the 3 months ended March 31, 2023, the unaudited pro forma revenue came in at around $13.2 million. Sounds like revenue is down compared to the yearly revenue we saw just now, which is not unexpected since a quarter is just 3 months. The net loss for the quarter is about $51 than last year. Let's switch over to the balance sheet as of March 31, 2023. Here we have assets, liabilities, and equity. This financial statement is a snapshot into what the company owns and what it owes. Total assets are about $111.8 million. When it comes to liabilities, the total comes to around $88.7 million. The equity is the owner's stake in the company after all debts are paid. And finally, the exhibits. Exhibit 99.1 includes all of the financial information we just talked about and the details of the acquisition. Exhibits 99.2 and 99.3 are the financial statements of Honest Days Work that were filed previously. Exhibit 1.5 alright, so what's the big picture here? This amendment is all that cleaning up after a merger and a financial restatement. It's not exactly a sign of smooth sailing. The pro forma numbers give us a glimpse of what the combined company might have looked like, but they also highlight some real challenges, specifically the significant losses. The financial restatement is always concerning, as it means the company's previously reported results were not accurate. It erodes trust and can lead to all kinds of problems, from lawsuits to difficulties raising capital. Add to that the losses that the company is incurring, and the picture is not looking too great. The company needs to reduce spending drastically or increase sales revenue. Latch is definitely facing some headwinds. The merger with HDW was probably intended to bring synergies and boost growth, but the financial restatement and ongoing losses are casting a shadow. The company really needs to focus on improving its financial controls and getting its spending under control, and hopefully the pro forma numbers will eventually reflect a healthier, more profitable business. Thanks for tuning into Corporate Decoder. If you found this breakdown helpful, be sure to like, comment, and subscribe for more insights into the world of corporate filings. And if you have any companies you'd like us to decode next, drop them in the comments below.